This is exactly why fear is the main difference between you as a trader, that's you, being able to make a difference between 5% in the market to 15% in the market, between losing 5% to gaining 15%. And it's much easier than you know. It's because of fear. Because have you ever asked yourself, why do I hold the winning trades? You don't. You cut the winning trade short and you hold the losing trades. But why do you do that? You take trades that don't align well with your strategy. Why do you do that? You trade in sessions you shouldn't trade. Why do you do that? You have been able to bounce from strategy to strategy to strategy, and all of them have been losing. You have bounced from guru to guru, from trading master to trading master, but guess what? All of their teachings haven't worked for you. Why is that? Is that because that you're just terrible in Forex and you will never make money in investing? You'll never make money in stock options? You'll never make money in these different types of investing? Absolutely not. It's not because the strategy doesn't work, and it's not because you as a trader don't work. It's simply because you don't understand the role that fear actually plays in your trading. And in this video, I want to break down exactly what fear is. I want to give you the different types of fear that you're going to be seeing in your trading. I want to show you the effects that it has and how you can fix it. Let's get into it. But just so that we don't forget, and that you as a trader over here, you'll be a happy person after watching this video. I want to give you as much value as possible you can take with you. I want to write down exactly the points that we're going over and what we've gone so far. So we're going to be going what it is, types, why it's bad. Well, not even why it's bad, but why it's the difference between you having a negative 5% month and a positive 15%. So why it's costing you. And last but not least, we're going to go over exactly how you as a trader, you're going to be able to end this fear in your trading. And I'm going to give you practical steps and tips so that you can overcome this fear and actually start making money trading. All right, perfect. So let's get into it. Put my trusty marker up here. All right. Should I keep the stick figure or should I keep you on here? Let me keep you on here. You look happy. I'm gonna keep you on here for now. But when we're trying to understand how to properly make money in the market, because this is something that I say all the time, and this is something that I have been saying to people that come to me and I help to trade. Because I've been day trading for well over 10 years in this market. I've seen both the successful people in the market and the people that are unsuccessful in the market, and they say unsuccessful in the market. And the one thing that I need you to realize, and we can change up this color scheme, but I need you to realize this one simple truth in the market, and I'm gonna write it down so you can take notes. What is this? This means that the strategy that you're trading, it does not equal profit in the market. Why do I say that? That is so unconventional to what you have been taught to learn as a trader. Because you as a trader over here, right, you're thinking in the market, well, if I just follow whatever trading guru is out there, right, and I pay thousands of dollars for his strategy, I learn his strategy, I learn from him, that I will be profitable just like he is. And I'm telling you now, from trading in this market for over a decade, this thought process is not true. And the strategy does not equal profitability. Because I want you to ask yourself, You have learned a lot of different types of trading styles. You have traded a lot of different types of trading styles. Whether it's break and retest, whether it's smart money concepts, whether it's whatever, but you have done a whole lot of different trading, but yet you haven't made money. So why haven't you made money? Is it because break and retest trading doesn't work? Is it because smart money doesn't work? Is it because ICT, in form of smart money? Is it because that doesn't work in trading? Is it because indicators don't work anymore? Or something even more simple than that, looking at trend lines? Is it because all of these different strategies don't work? Absolutely not. I know people that's killing it with break and retest. I know people killing it with smart money. I know people killing it with ICT. These strategies work. So if these strategies work, and the people that's teaching you these strategies, hopefully they're making them work for their trading as well, then what's the difference between their trading and your trading? Why is their strategy working for them, but it's not equaling profits for you? And I guarantee you it's not the strategy. Because you can trade any strategy in the world. You can go outside, you can throw sand in the air, and that sand can tell you whichever way it blows, that's the pair that you should buy, X, Y, and Z. You can do something as crazy as that and still make money in the market. Because I'm telling you now, just like flipping a coin to decide what to buy and when to buy it, you don't need to focus on strategy, because strategy doesn't matter when you're talking about making money in trading. And that goes against everything that gurus have been able to teach you. But I'm telling you now, that after over a decade, the most important thing to trading is not strategy. The most important thing to trading, and I'm gonna write this down, I'm gonna change colors and I'm gonna write it in a different color. And the reason why is because it's so important. And if you have a preschool kid, or if you have a child, or you have a nephew, aunt, cousin, uncle, whatever it may be, and they may be in elementary school and they have better handwriting than me, please send them to me. I'm looking for people to write. But psychology, this may not be how you spell it. This is probably not how you spell it. But psychology is the exact reason why somebody can take the same simple trading strategy and they can make profit with it while you are losing money in the market with it. That is the simple reason. You want to know the X factor. You want to know why some people are successful in a third of the time that it took you to become successful. You want to know why some people are able to trade break and retest and make a whole lot of money, while other people, break and retest didn't click. So people think that break and retest is a garbage strategy that doesn't work. So they switch to ICT and they may find success with that. It's not because break and retest doesn't work. It's because it didn't work for you. It's because your psychology was not in the right place for this to work. But for ICT, you were able to have better psychology to make this work. Strategy doesn't matter. So when I see people spending just absurd amounts, anywhere from 6,000 to 12,000, or even less, 4,000, for some type of trading strategy, for some type of guru to teach them how to trade trend lines. If you want to pay that much, you can pay that much, but I need you to understand that the same strategy that's going to cost, say, $200 can work just as well as that strategy costing $12,000, $6,000, $4,000. Why? Because it's not the strategy that equals the profits, it's the psychology that equals the profit in the market. That's why I tell people, you can take any strategy. I don't care what it is. I don't care if it's trend lines. I don't care if it's indicators. I don't care if it's ICT. I don't care if it's smart money. You can take any strategy in the market. And as long as you have the right psychology to trade the strategy, you will have profit. But I know what you're thinking right now. You're thinking, well, RD, that doesn't make sense because some strategies, they actually lose money. It doesn't matter if I have great psychology or not. These strategies actually lose money. And guess what? You're correct. But this is where the law of numbers comes into effect. And I don't want to get too much into this in this video. Let's switch up the colors. Let's go with the green. Boom. And I don't want to go too much in this video on the law of numbers, but when you have a strategy, it's the proven strategy with psychology that equals profit in the market. Now, what the heck is a proven strategy? This is a proven strategy. Let's go bottom right. I'm doing an awkward squat here for you, but proven strategy. So what the heck is a proven strategy? A proven strategy is simply going to be something where you know the win rate. Let me just say WR for that. And you know the risk to reward. Win rate is the amount of trades. So if you trade 1,000 trades, out of those 1,000 trades, you may win 30% or 300 trades. That is your win rate. And your risk to reward is that 30% of trades I won, what's my average amount that I risked? And what's the average amount that I made? So if a winning trade equals me risking 1% in order to make 5%, that means my risk to reward is a 1 to 5. And here's the beautiful part. If I have a 1 to 5 risk to reward and a win rate of around 25%, what does that mean? That means that statistically, out of 100 trades, I'm gonna win around 250 trades, right? And for those 250 trades I win, I'm going to make approximately 5 times the amount of money I invested for that trade. Now, because you have a win rate of 25%, that also means, I'm gonna go to the right a little bit, right? That also means that out of, let's just say 4 trades, right? So that means that out of 4 trades, 1, 2, switch up the color, 3. And if you don't know, these O's are trades. I know it doesn't make sense, but we're going with it. So out of 4 trades, 1, 2, 3, 4, you are going to win approximately 1 trade and lose the other 3. Why? Because that's 25%. So each one of these losing trades is going to be -1, right? Whether it's 1% or 0.5%, it's going to be -1 RR. All right, so we're going to do -1 here, -1 here, -1 here. So all together on the losses, you're down -3 RR. But what's the beautiful part about understanding your numbers and having a proven strategy? That while yes, you are down with your losses, this one win, what is it going to do? It's going to be plus 5%. And why is it plus 5%? It's plus 5% is simple because your risk to reward is a 1 to 5. So that means that one winning trade is going to be 5%. So now instead of being down 3 RR, you're going to be positive 2 RR in your trading. So this is what a proven strategy is. A proven strategy is a strategy that is tested. You know exactly what your win rate is. You know exactly what your risk to reward is. So you know that over time, if I'm able to execute this strategy flawlessly, because I have great psychology in the market as a trader, that I will make this profit. And that is literally all it is to trading. And that is literally, I'm saying literally a lot, but it's still important. That is literally why having a proven strategy is important. Now, for this proven strategy, that's why I'm saying a strategy you pay $200 to learn can have the same effectiveness as a strategy that you paid $12,000 to learn. Because all that you're concerned about with your strategy is it proven? Is there a statistical edge that this strategy has in the market, which is the relationship between your win rate and your risk to reward? Is there a statistical edge that it has in the market? If it does, perfect. I don't care if it's 200 and I don't care if it's 12,000, because I know if I continue to trade this edge, I will make more money than I ever paid for this strategy. But this strategy, and I'm gonna go back to here, this strategy does not work, does not equal profit. Even though it has a statistical edge, it will never equal profit if my psychology is not in check. And this is exactly why psychology is the most important factor in trading. Yes, but more importantly, this is exactly why fear is so important, because fear is a part of psychology. And fear is that exact thing that makes you're starting to get a lot of arrows on you. This is 1, 2, 3, 4 arrows. Crazy. But this is exactly why you as the trader are unprofitable, right? Exactly why you as a trader, your psychology is not in check. And as a result, it's causing you to lose a lot of money in the market. So let's get into fear. And why fear specifically, and you can see my markers up here. We're going to be switching through them. But why fear specifically is because fear is one of those psychological aspects. There's a lot of different parts of psychology, right? And fear is one topic and one aspect of psychology that is the most damning for most traders. And that's why I want to spend time talking on it today. There's a whole lot of different types of psychology that come to play that causes traders to lose money. But fear is, okay, this guy's going to have to be deleted. Don't worry, I'll draw you back. I'll draw you back in a different color. We're going to have to flip a coin for the color, but I'll draw you back in a different color. Erasing a whiteboard with one hand is a Herculean task. I'm going to drop applications for anybody that wants to start being the official whiteboard eraser for RD trades. All right. Let me just delete the whole board. There we go. All right. Beautiful. All right. So let's start off with fear. All right. And if you want to see again where we're going, we're going to start off right here with what exactly fear is. So again, this is such an important topic that I want to write this on the board, and not just write it on the board, but I want to write this on the board with a red marker. Red so you know it's serious, right? So what is fear? That is terrible. I know it looks awful. Let me delete that. No, we're going to keep it. It looks terrible. Again, if you have a 5th grader that has better handwriting, please send them to me or her to me. But what is fear? Fear is always going to be, and I'll write this down. This is what fear is. And it may be contrary to what you think, but, and I'm going to read this because I know you can't read it. I'm a trader, not a speller, nor a writer. But fear is going to be the illogical response to a belief that you as a trader have. I didn't draw the trader. Let me draw you. Boom, there we go. Sad face because you have fear right now, right? But fear is always going to be the illogical response that you as the trader believe in that which has not yet occurred. RD, what the heck does that mean, right? What does it mean to have fear in something that hasn't even occurred yet? Well, this is exactly what it means. It's an illogical response. It's a response that doesn't make sense. So you fear losing a trade, right? And we can even write this down, right? So fears can be losing. Right? So these can be some illogical fears that you have in the market. You can have fears of losing a trade, fear of blowing your account, but understand that it's an illogical response to a belief that you have in that which has not yet occurred. You haven't lost a trade yet, but yet you fear losing the trade, right? And that fear that you have of losing the trade, even though it has not yet occurred, because you have belief that it will occur, you then create an illogical response. Same with blowing an account. Let's switch up the colors. Boom, let's do blue. Same with blowing an account. You fear blowing up an account, and that has not yet occurred, but yet you believe in that which has not yet occurred. So in response, you create an illogical response to a belief that has not even occurred yet. This is what fear is. And this illogical response, this is that exact thing that's going to be blowing your trading account. Because the thing about fear, the thing about trading with fear that's so incredible in my experience as a trader, is that you can believe in it and you can believe in something that has not occurred, but it's the illogical response in that belief that causes you to actually lose your trade, that causes you to actually blow your account, even though that this was the exact thing that you were trying to avoid through your fear. So understand one thing, that fear is not serving you in your trading at all. Fear will never serve you in your trading, and fear will always be an illogical response. So you're probably thinking, okay, that's great and all. I understand that fear is illogical. I understand it's something that hasn't happened, and I shouldn't believe in something that hasn't happened yet when it comes to trading. Perfect. But what are the different types of it? And not just the different types, what are those illogical responses that we see? Let's jump into it. All right, back with the eraser. What do you think? Should we keep you? Should we keep the disappointed trader? I like him. I think that's good. I think that's one of the best stick figure drawings that I have made. In drawing this with one hand and erasing this with one hand, I understand that that's a talent. If I ever wanted to stop being a trader, all I would do is start being a whiteboard writer with one hand. And if you think I'm playing, try to do it by yourself. And I promise you, it's going to be a lot tougher than you ever thought. But let's get into the types. So we already talked about what fear is. It's the illogical response to something that hasn't even happened yet. But now let's talk about the type. So what are the different types of fear in the market? But more importantly, the different types of fear in your trading. So we have fear. Now, for types, let's go to a different color. I like blue. So there's a whole lot of different types of fear because everybody is unique as a trader. But these are the main types of fear that I see from other traders that I saw myself when I first started out trading. One, and this is going to be a big one. Something as simple as that. You fear losing. Now, when I say losing, don't just take this as a blanket statement, but this can be in a lot of things. This can be fear of losing a trade. This can be fear of losing your account. This can be fear of, say, your strategy not working. This losing aspect, whether it's losing a trade, losing an account, or having to lose your strategy because you learn that your strategy doesn't work and it no longer serves you. This losing causes people to have an irrational response, which is one of the types. Now, let's take a step further, right? And let's better understand this. Why is losing so detrimental? Because understand, like we talked about, trading is simply a game of numbers. It's a numbers game. So while, yes, you cannot control trades that you win or lose, you also should not try to live or die on one trade. Because you have to understand as a trader that you, as a trader, you can do everything right in the market. When I say everything right, you can follow your strategy to a T and you can still lose a trade. And if you don't have good risk management, you can still blow your account. And if you don't master and conquer this fear, the strategy will never work. So if you don't do the things that you are required to do, guess what? You will always be in a perpetual state of losing. And so many people fear losing that they're going to go through the irrational responses to losing that we're going to talk about next. But fear of losing. What other types of fear do we have in the market? There's going to be fear FOMO. And everybody knows what FOMO is, right? And I think FOMO is one of those things that has gotten such a kind of a bad rep out there, that so many people really miscategorize what the heck FOMO is. This is FOMO, fear of missing out, but it's not what you think. This can be fear of missing out of profits. This can be fear of missing out on your account. This can be fear of missing out on profitability. And I will go a step further, profitability. Somebody send me a dictionary when you have time. But this can be fear of missing out on a trade as well. All right, let's see if we can draw this. Perfect. So let's break this down. Fear of missing out. So you have fear of missing out on potential profits you may make in the market. And that's why you take trades you shouldn't take. Why? Because you fear that this trade may win. And that's the same thing with trading, right? You have fear of missing out on a trade that could win. So you're taking trades that go against your strategy, but you saw this trade work out before. Or you think price is moving so well, you see a bullish engulfing candle, whatever the case may be, and you're saying to yourself as the trader, man, I gotta get into this trade now because I'm fearing missing out on this trade. And I know if I miss out on this trade, then I could potentially miss out on profits and profitability that I could be experiencing. And when you do that, that's one of the quickest ways to lose your account. Simply because you are trading a strategy that is not tested. Or in other words, you are trading a strategy that you don't know the win rate, you don't know the risk to reward. Why? Because you are trading something that you think is going to work out instead of something that is tested and proven in the market. So FOMO is one. And the last one, and again, there's so many trades out there. There's so many different types of fear out there in the market. But the very last one that I want to highlight, and this is going to be one that you never thought about, but if you've been trading long enough, you feel it. And before we even get here, one more fear of missing out. Well, let's not even do that. I'll add one more after this. But lost time. What does lost time mean? You fear of the time that you may have lost, because a lot of people think, man, I should be so many people have this thought, because a lot of people see people that just enter into the market and all of a sudden it seems like right when that trader enters into the market, that instantly this trader finds profitability. And you as a trader, you might have been in the market. Let's draw some stick figures down here, right? So this is you. You've been in the market for say 4 years. This person has been in the market 6 months. But yet this person is seeing profitability in this trading while you as a trader are not, and you're thinking to yourself, man, I should be this guy. I'm losing, I have FOMO, and I fear the time that I actually lost in the market. I should be this guy, but instead I'm this guy. How is it that this guy has been trading for 1/8 of the time as me, but yet he is profitable and I'm not. So you are fearing the time that you have actually lost in trading, thinking I should be further than I am. And as a response to that belief, you're going to start trading irrationally. It's going to start invoking irrational responses within you. Why? Because this lost fear, this lost time is a form of fear. And whenever you feel that lost time syndrome, it's always going to force you to start making decisions in the present and the now, because you want to get further than where you are now in a short amount of time, because you think you should be further than where you are. And the last one that I want to highlight, and this is an important one. We don't have a lot of space. Let's see how we're going to do this. Let's draw it down here. I'm doing a very awkward squat for this angle, but just for you all, of course. The last one that I want to highlight is transform. What the heck is transform? Transform means that you as a trader, you feel that trading will not be able to actually transform your life. Right? And what does transform mean? It can have a lot of different views, right? Whether this is you quitting your job, whether this is you having just extra income, or whether this is you not only trading and quitting your job, but this is you providing lost time again. But let's go back down, right? This could be you actually being able to provide this is the worst handwriting. Whoa, that is bad. That is the worst handwriting that I have had in a long time. All right, let's try to rewrite that. Let's try to rewrite that real quick. So let's do provide for family. Right? So it doesn't matter what type of transformation that you're looking for in trading, whether you're looking to quit your job, extra income, or have so much that you're able to provide for your family, right? Buy your mom the house, your dad the house, and that American dream. It doesn't matter what it is, but you as the trader, you fear that trading will not allow you to actually be able to transform your life. And all four of these fears are common fears that I see traders have in the market, that I see traders make in the market. And I'm telling you now, they are all irrational fears. And these are all fears that you as a trader, you should not be experiencing. And when you start to experience these levels of fear, you start to act out irrationally and have an irrational and illogical response to these fears. And that irrational response to these fears causes you as the trader to actually lose more money, and it causes all of these fears to come true. So these are the types. And just a little off note, isn't it funny how when you have faith in something, it comes to pass, it comes to work. It actually shows up to be evident in your life. Even if you have faith in fear, which is all fear is the faith in something that has not yet happened. Isn't it funny that even when you have faith in fear, that the very thing that you feared comes true? You didn't want to blow your account, but your fear of blowing your account caused you to blow your account. You didn't want to lose money trading. You didn't want to lose a trade, but that very fear of losing a trade caused you to lose several trades. Isn't that funny? That's why as traders, we can't have emotions, we can't have beliefs, but you must execute your strategy without fail and with consistency. And not let emotions, whether it's fear, whether it's greed, whether it's whatever, you can't let these things cause you as the trader start trading in a way that is not conducive to you making money in the market. So great. So we went over fear. Perfect. Now, let's better understand exactly what this fear is costing you in the market. So let's come over here. So you as the trader, look, you're still unhappy, right? Because we still have fear. You're still not making money yet. But we know the different types of fear. We know what it is, but what is it costing you? It is very simple. There's a lot of different ways that fear manifests in your trading. But there's a few that I want to go over. A few common ones that I see. Hesitation. Hesitation is one of the biggest killers to trades. I'm gonna make a whole video on hesitation because it's so important. But hesitation is that fear or that little thought process or hesitation when it's time to click the button, pull the trigger on the trade, you hesitate. You as the trader, you wait. Why do you wait? That's a question you have to ask yourself. Is it because you don't believe? Is it because you don't believe in your strategy, so you're hesitating first? Is it because you don't believe in your entry? Is it because you're risking too much? And you're risking more. And you're risking more than what you are willing to lose. And when you risk more than you are willing to lose, you will always have hesitation before entering a trade, because now you're no longer following the numbers game, understanding that over time, if I take enough trades, I'll be profitable. But when you trade too much on one trade, you're living or dying on one trade because you're risking too much. You're risking more than you're willing to lose. So you're going to live or die on one trade now. So now you need this trade to work out, because if this trade doesn't work out, you're going to blow your account. Because if this trade doesn't work out, you know, because of your win rate, it's very possible for you to blow your account and do everything right, just because you're risking too much on your trade. So you're always going to have hesitation in that instance. It can be a lot of things. I just listed a few. But this hesitation is detrimental, because hesitation, if we can go off to the right a little bit, hesitation is going to cause a lower risk to reward, lower win rate, and unknown profits. It's going to cause a lower risk to reward, a lower win rate, and unknown profits. Because you're hesitating, that means you're going to get an entry that's worse than the entry that you should have gotten, right? And if your entry is worse than you should have gotten, that means that you're going to have a bigger stop loss if you hold everything else equal. So if you have a bigger entry and a bigger stop loss, then that means if you have the same take profit, that automatically means your risk to reward is going to be lower. And now that you're trading a different strategy, and let's say you modify your stop loss so that you can keep a tight risk to reward, well, guess your win rate is going to be less, because your stop loss is not going to be in the place that it should be. You're no longer trading your verified strategy where you know exactly what your win rate is and you know exactly what your risk reward is. You're no longer trading a verified strategy. Instead, you're trading something that's not tested or proven. And that's going to result in that lower risk reward, lower win rate. So that means that over time, you have no idea how your profits are going to look, simply because you as a trader haven't tested your strategy to understand in the long run, does this thing even make money? You don't know. But hesitation is one method of fear that is detrimental and deadly. It's something that most traders struggle with. And not just struggle with, it's something that most traders do in their trading. But you don't just have hesitation. You also have our friend that wants to keep you broke in trading. So I don't know if it's really your friend, but you have overtrading. Overtrading is detrimental. But why is it detrimental? Because overtrading, again, this can happen from a host of different things, but this can come from whether you lose a trade and you lose that trade, and you as a trader, you're going to want to make that trade back. So you're going to start over trading. You're going to start taking trades that you shouldn't take. Why? Because you lost a trade and you want to make it back. It's a form of, and I know you heard this, revenge trading. What is revenge trading? Revenge trading is you go on revenge because you lost a trade. You didn't want to lose a trade, so you start over trading in order to make that money back. But because you're over trading, you're taking trades that are outside of your strategy. And when you take trades outside your strategy, just like we saw over here, when it comes to hesitation in the market, you're going to have a lower risk to reward, a lower win rate, lower profits. And that means that you as the trader are actually going to be losing money because you're over trading. But over trading doesn't have to come from loss. It doesn't have to come from revenge trading. Over trading can simply come from winning too much. And this is why I say, especially when you're starting out or trying to find profitability, it's better to lose than win, because winning can reinforce bad habits. Because some people, when they start winning too much, they become what I like to call I know for sure I spelled that wrong, but traders become euphoric in the market. What is euphoric? Euphoric is the difference between a happy trader and a trader that is just in ecstasy. And when you become euphoric, you start over trading. You start taking trades you shouldn't take because you think everything is winning. You think that you're almost like God now, and that all your trades are going to work out. So you are not trading out of revenge, but when you win, you are trading out of euphoria. But it doesn't matter whether you are over trading because you lost a trade or because you're winning a trade. Whether you're trading out of revenge trading, which comes from losing, or out of euphoria, which comes from winning, is all forms of overtrading. And overtrading is you trading a strategy that is outside of your tested and proven strategy, i.e. you're making little tweaks to your strategy. You're trading things that you shouldn't be trading just because you think they're going to win because you've been winning so much. This is overtrading, and it has the same exact effect as hesitation in your trading, and you're going to lose money in the long run. You're going to have a lower risk to reward, lower win rate, and unknown profits. So overtrading is another form of fear in the market, believe it or not, along with hesitation. And last but not least, and we touched on it a little bit, and again, there's so many different forms of fear. I can't cover them all in one video, but I wanted to go over the major ones. And the one that I see a lot of traders struggle with, I'm giving some of the top 3 types of fear that you need to identify, is simply risk. So a lot of traders, when they lose a trade, and let me try to squat down again. All right, so a lot of traders, when they lose a trade, right, let's say lose, they start reducing or increase. What does this mean? So when some traders lose a trade, they start reducing their risk. Why? Because they lost a trade, they think they're going to lose another trade, i.e. they have fear, believing that they're going to start losing more trades because they lost a trade, which is very irrational. But they have fear that they're going to start losing more trades because they lost a trade, and as a result, they're going to start reducing their lot size on their trades because they have belief that they're going to lose more trades even though that hasn't happened yet. In other words, they reduce their risk because they have fear because they lost a trade. Or same thing is true in reverse. They could lose a trade and they want to make that money back, which is the same thing that we talked about in overtrading, right, with revenge trading, but they want to make that money back, so they increase their lot size more than they should. And that's how a small losing day turns into a very big losing day, because they increase their risk when they should have kept it equal. But it also works in reverse. So if it works for losing, it works for winning. So a lot of people, when they win, They want to stay positive for the day. So if they want to stay positive for the day, they're still going to take good trade setups, but at the same token, they're going to reduce their lot size so that if they do lose, it won't wipe out the wins that they have in the market. And same is true with increasing. And this goes back to that same feeling of euphoria. You're going to start over trading with euphoria, and you're going to start increasing your lot size. Why? Because you think you can't lose. Changing your risk is a sign that you have fear in the market, belief in something that hasn't happened. So you're going to have these 3 illogical responses that's going to devastate your trading in the market. Simply because you as a trader have fear. So now that we know, not even know, but now that we better understand the different types of fear that we have in the market, we understand why it's costing you. And we understand the different illogical responses that we make in a result of our fear. How do you overcome it? How do you finally be able to, as a trader, how do you finally be able to beat and kill fear in your trading so that you as the trader can turn from being sad in trading to actually making money? But not just making money, because you don't want to just make money, but make enough money to do your dreams, whether it's quit your job, whether it's provide for your family, whatever the case may be. How can we be able to take any strategy we learn and become profitable with it by just mastering our psychology and killing this fear? That's simple. You need to come up with a system. And this is the last time we're erasing for this video, but let's erase one more time. Now, with these different points of hesitation, ask yourself, what form do I see apparent in my trading? Erasing with one hand is crazy, so I'm going to leave some of this drawn on the board, but let's just go over the important parts. And the important part is this. And I'm gonna write it as big as I wrote anything else to show its importance. A system. And this system is how you're going to make money in the market. Every great trader has a system. That's why a trading guru that doesn't teach you a system is not a guru you should be learning from. Anybody can teach you a strategy. Because like I said, your strategy can be flipping a coin and trading based off that. Why? Because strategy doesn't matter as long as it's a proven strategy that you have tested. That's why I don't believe in people paying thousands of dollars for a strategy. Instead, you need to pay thousands of dollars for psychology that goes into your system. The system is what you should be paying thousands of dollars for. In a system, let me write it right here. A system is going to be the strategy plus psychology plus execution. Let's circle this. This is one of the most important points. This marker's just about dead. Let's go back to blue. Bam. This is going to be one of the most important points that we go over in this video. Having a system when you trade. And not just any system, but a winning system. So it's important to have your strategy, because the strategy is the thing you're actually going to trade. But understand, the strategy is the least important part, because as soon as you get a strategy that has a winning edge, then that should be all you go with the strategy. All your time from there on should be spent learning psychology and mastering it in execution. Psychology is what we just went over. I only went over fear and a few different types of fear, but there's a lot of different psychological aspects out there to conquer. But conquering psychology is how you turn any strategy into money in your actual trading. Now, what about the actual execution in our trading? Because understand that all three of these parts make up what your system is. And your system is the thing that's actually going to allow you as a trader to profit in this market. So what about execution? Why is that important? Execution is important because execution is actually going to be the way in which you are going to be executing your strategy by using consistent psychology in order to execute it flawlessly. And that execution method that you use, it can vary depending on you as a trader. So if I could just give a few examples. I know some traders' execution methodology may be using stop orders or limits, alerts, tape. This makes no sense. What am I talking about? What are stop orders? What are alerts? What are tape? We're talking about this grand scheme of things, which is creating a system. Well, some traders don't want to look at the charts, so instead they just set stop orders so that when price goes through a certain level or price level in the market, they're automatically executed on their trade as a trader. Why? Because they understand that psychologically they can get a little damaged, right? Especially when we're talking about the aspect and the concept of fear. They know that they can get a little messed up. So as a result, they set these stop orders so that they don't have to look at the market. And them not looking at the market benefits them simply because it helps them with their psychology. So that's a method that they're able to execute their strategy while using consistent psychology. Another one, maybe your trader can't use stop orders like they can be able to, like other traders may be able to with your strategy. So maybe some traders just set alerts. So they're not tempted to take trades that they shouldn't take and just let the market play out how it's going to play out. And they get an alert on when they need to come back to the market to place their trade. So that way they're staying out of the market, they're not overanalyzing, so they're able to properly execute their strategy with their psychology. Some people, I know, traders use tape. And this tape may actually be just taping over the profit and loss while you're in a trade, so you won't gain fear towards losing your unrealized floating gain that's in your account. It really does not matter what your execution strategy is, as long as you have an actual strategy to be able to execute with the psychology that you have learned based upon your strategy. The strategy that I use isn't important. The strategy is the least important of these three. The system that I make, the system that I have developed over a decade of day trading in the market, this proprietary system that I've been able to come up with, it allows me to be able to kill the psychology. Not kill the psychology, we love psychology. To nurture psychology by killing emotions in my trading. And emotions when you're trading is the worst thing you can possibly have, because fear is one of the emotions that are detrimental along with a lot of them. But it allows me to be able to kill that fear in the market. It allows me to be able to consistently execute my strategy. Consistently allowing my psychology to reign supreme, killing my emotions so that I can trade my proven strategy that has a tested edge in the market, i.e. win rate and risk reward, and allows me to trade that effortlessly without letting emotions, without letting fear get in the way of that. And this is why you should be paying money for a system and not just a strategy. Because as you see, strategy is a very small part. Flip a coin and trade based on that coin flip. Don't do that. That's not financial advice. But I'm saying the strategy can be anything. It's not important as long as you test it and you find the statistical edge. So the strategy can literally be anything. That's why I'm not a fan of people paying a lot of money for strategies. Because you can go on YouTube, find a very simple breakout strategy, and become very profitable with that. That's why you can profit literally from any strategy in the market as long as you understand and master your psychology and you create a plan to be able to execute your strategy while using the psychology that you've learned to be able to execute that strategy effortlessly. This is you creating a system, and this system is how you, as a trader, over time, you are going to make a lot of money in the market. It's not because you have a special strategy. It's not because you have a golden breakout strategy you learned from a guru or the strategy 2.0 that they come up with. No. You took a simple strategy. The simpler the strategy, the better. I promise you that after over a decade of trading. The simpler the strategy, the better. But you prioritized psychology while trading, so you can eliminate fear and other emotions in your trading. And you created a plan of execution, and all these three things created your system. And one thing that I can tell you, right, if we can go back to the beginning of the video, we set that strategy. We said that strategy does not equal profitability. But one thing I can tell you this from experience is that a system equals. Is that a system equals profitability. A strategy does not. If this makes sense, start learning a system. I teach people my system and what systems are more in depth. But you as a trader, you need to start prioritizing a system over a strategy. And this is what fear is, the types of fear, why it's costing you in trading, and you overcome it by creating your system.